Okay, hello and welcome everyone. Today is Thursday, March 5th, and I'm Michael Boutros, currency strategist with SB Trade Desk, here for this live intraday strategy session, guys. We are sitting through Mario Draghi's presser as we speak. I'll be bringing you the highlights. Stefan says video okay, audio okay. Petro, good morning. Eileen, the whole house is here today. So we obviously didn't get any change to interest rates as expected. We're looking at the headlines hitting right now. Draghi saying that sovereign bond purchases will start on March 9th. It says combined monthly purchases will be about 60 billion euros a month. ECB to start buying public sector bonds. ECB will buy 60 billion euro assets a month through September 2016. So we'll be watching the euro as this happens, guys. Again, at that juncture where we are right now, we talked about the euro yesterday at length. Here's what the intraday chart looks like. It fell right into that pocket yesterday as we were talking right after the webinar with the break again of the European opening range low. And here we are just missing, I was talking about this with Jamie just a couple of minutes ago, a longer dated extension here at 110.22, which was the target on the pullback here. The low that we made in overnight, just barely missing that one. 110.25, so literally by a couple pips there. Nonetheless, just watch out. I do think there's a real high probability here to see a snapback in the euro. If you do, the first level of contention to get through is the same level we were talking about yesterday. So 110.96, this region right here. If we get back above it, you'd look for a rally back into 11.55. Also take note of the momentum signature here, guys. You got a couple of trigger breaks that broke on the way up. So again, if we clear 60, that would be a reversal in momentum. And obviously, don't forget everything that happens today, guys. Despite the volatility that we'll see right now with Draghi, you do have non-farm payrolls on tap tomorrow. We got a mixed picture yesterday from the ADP read, so certainly puts more emphasis on that number. As it stands right now, market participants are looking for tomorrow's non-farm payroll print to come in somewhere in the range of 235,000 jobs for the month of February. That's off the 257 we got the previous month. So looking for that to give us broader volatility in the dollar. Also take a look at one other thing as you watch the euro come off here. Sorry about that, guys. Give me 1 second. The dollar index. Probing through that major key resistance we've been watching for months now. Okay, so today's close is going to be critical. You're watching for 11,880. It's the same level we've been watching since the end of January, guys. It's the same region of resistance. We probed through it just barely. But with that reversal signal that we're getting on the euro and the major event risk on tap, you'd want to be cautious about chasing the dollar higher from here. Just again, a quick word of caution there. Today's close is going to be critical. So with that picture in mind, let's go through the setups we've been talking about on the intraday page. British pound comes in first into mind. This one played out pretty decently yesterday too, guys. So last time we left over, or when we looked at this last night, it was just breaking below the 52.70 level. And that was the near-term resistance. We were looking for a targeted run into 52 in overnight. Here's what sterling did. Okay, again, just like the euro, missing it by literally just a couple of pips. Keep in mind what that region represents, guys. It's the lower median line parallel from the February lows, January lows here. And then the slider gave you a nice area of support right into the 52 handle. So we just missed that. The trigger did give out after some divergence in momentum. So again, very similar to what we're looking at the euro, a break of top of near-term resistance here at 52.70, gives us a little bit of a topside slope here heading into U.S. trade. So, these thin liquidity conditions, by the way, guys, just as a word of caution for our strategy as it pertains to intraday, these liquidity conditions can be awesome trading conditions. They can give us great opportunities, but they can also be, very treacherous. So we want to be nimble, especially in the 24 hours, 48 hours leading into an interest rate decision, i.e. /NFPs. With where the dollar is and where some of these crosses are, you want to be a little bit cautious about chasing these positions. Also, on counter trend trades, just as a word of caution as well, those are typically going to be half leverage. So if we've been scalping the euro on the way down from the opening range break or the pound on the way down, until we get the conviction reversal, you're trading half leverage on the way up. That's just the way I like to keep it, so we don't undo any of the damage that we did earlier, any of the gains that we did earlier in the week on that nice decline. Same thing on the euro. Okay, so just keep that in mind. We'll watch the index. If it does close above 11,880, we'll continue to favor that top side for the dollar. Again, on the index for the top side breach, you're looking at that upper median line parallel if we do break. So that takes you just above 11,920, 11,930. All right. Bearish invalidation level obviously is going to be this range between slopes. By the way, the bottom of that range comes in perfectly with the weekly opening range low, and that's right around 11,800. So real clean levels here as we're heading into tomorrow's read. Any questions on the euro or the sterling? Guys, we'll keep coming back to the euro the entire webinar as we get through some more of these comments from Draghi. Some more comments hitting the wires now. Draghi says consumer price drop mainly due to cheaper energy. We're going to hear that a lot. Says risks to the economic outlook have diminished, but says the economic outlook remains on the downside. Says better forecasts reflect weaker oil prices. Says, okay, we already got that. Better forecasts also reflect weaker euro and QE. Draghi sees very low negative inflation in months ahead. Says consumer price drop again. Largely on energy prices. So I'll keep bringing you highlights throughout the session as those hit. Listen, this is all baked in, guys. There's nothing here today that we're actually looking for as a new development. It was really just the scope and the pace. It's $60 billion a month. It seems that their outlook is not so, they're not so concerned about negative inflation. In fact, Draghi just said, excuse me, sees very low negative inflation in the months ahead, says inflation to rise gradually later in 2015. So the outlook is not that bleak. QE's in play. We've been, the euro's been pricing in QE. It could be a sell the rumor type deal. We just made it through the Asia opening range high. Okay. Again, you're looking at 1155. So just a quick update also for yesterday's piece, guys, on the euro, or the update rather. Here's what we were looking at last night. Here was this pocketed range. Okay, so the drop, there's 1022. We just missed that, like I said. This is will continue to be the near-term bullish invalidation level. Okay, these circles are here for your benefit, guys. It's what will change our bias. So, for example, yesterday on the decline, this was the initial target. On the decline with a break of this region, you're looking for a drop into this zone. Okay, a break above this zone invalidates that downside bias. At that point, you look again for 112. And the opening range highs. So far, if you're trading within the releases, you want to be super nimble. We'll see if we can play some of this back and forth action here, but the momentum signature looks pretty solid off that low. Okay, even on the 5-minute chart here for the euro, 40 bounce, 40 bounce, 60 hold, but there's the 60 break and a turn ahead of 50. So we'll see if we can hold above those Asia highs. All right, so we'll come back to the euro momentarily. We went over the pound. I do want to talk about the sterling crosses. We've had some nice plays on that as well. See a question here from Sandy. Says, Mike, I'm long sterling on at 200-day moving hour, or 200-day moving average, 4 hour. Could we go there? Sure can. So the sterling Oz setup from yesterday, Sandy, I'm assuming you're talking about this. Kind of frustrated. I'm not going to lie to you. I got stopped out on this last night on that little slap right before I made the post. Lo and behold, that did hold. You got a beautiful trigger to the upside, which panned out an overnight trade. But I still like the trade a lot. So here's what the pound Oz looks like on the intraday. There was also an insane play in pound key I'll show you guys with a much, much stronger reversal bounce. And we talked about that one here in the webinar yesterday at length. So I hope some of you got a play in that. That was the only thing that recovered. The sterling Oz major key support that we came into, noted this on yesterday in a piece on Daily FX as well, 194.94 into 195. You have a basic possible gradient slope here and had a 100% extension off the high. So, this has been a trade that obviously is in a very strong uptrend. The momentum signature was exceptionally strong with a hold at 40, 60 break, double hold 40, 60 break. And we've been treating this as a correction. Classic correction. Your first phase gives you just a simple ABC, 2 equal legs down. You're looking for support here near term. Now, we're not trying to play the reversal necessarily, Sandy. It's just the rebound, so I don't want to get my appetite too wet for the top side just yet, but here's what it looks like on the intraday. and this is what I was concerned about. So you see that 60 hold in momentum? I'd be cautious here. So remember, it's a nice wide range scalp. You're looking for about 50 pips per scalp here. What he essentially did on this rally was just check the U.S. opening range high yesterday and come off. All right, and with that 60 hold in momentum, it puts the pressure back on this trigger here, Sandy. If that gives out, you might get another test of the lows here. Also, when we use the low in price action, this will give us another trigger. I think we'll probably have 3 touches. Yeah, it looks pretty good. All right, so watch that. Jay Jackson says, yes, took that sterling key long out now at the bottom of the opening range. My man, it was a beautiful play, right? I like that sterling key. And I should have had conviction on it yesterday. I was telling you guys I like that one better, but what's done is done. In any event, so watch the rebound here, Sandy. I think I just want to take a quick retracement of the weekly range and see if we've completed anything significant here. Okay, I'll just leave that 50 on. That's sort of the initial resistance range you'd want to play. On a trigger break here, you don't necessarily want to get bearish unless you get 195. Again, 195 is really big near term. A break below that, and essentially you're looking for 193.50. And that here on the daily chart is just a confluence, or on the intraday chart, is just a confluence of some key zones here, a 236 100% extension, a nice pivot in price. You also have the lower median line parallel in that range too. So the downside break targets I think are pretty clear. I'd rather try to stick it out and see if we get another bounce here off 95. But with what's happening in the Aussie, we could see this thing recover. So I'm not ready to give up on this just yet. Sandy, watch the opening range high for Asia last night. Watch like 195.40 near term for support. We're testing it right now. If the triggers give out and you get below 95, you just want to duck and cover on this one. I don't like that held 60 there, though. I do want to see a rebound off this and a break to continue maintaining the top side play. Let me just look at this at a 5-minute real quick. Yeah, wouldn't necessarily give up just yet, but watch this pivot here, right around 95.40. The sterling key, here's the other one, Jay Jackson, the one that we were talking about as a favorite setup yesterday. That actually played out like ridiculously nice. Here's what sterling key looks like on the day. Now, obviously, not all the setups are going to have quite this type of reaction, but it's important to be able to identify these key levels. So you're looking at 20080, 20090. We talked about this yesterday, the 50% retracement of the entire rally. Another pair that, essentially you're playing in a massive, massive range, but on account of the drop that you made with this break here, and momentum yesterday looked like it was coming right into 40 on that stretch, gave us a real nice cause or a real nice justification to try to press the upside, specifically with what the Kiwi's doing, right? The Kiwi, obviously, guys, on the swing side of things, a little frustrating there. That thing just took us out of the short and then tumbled. We'll take a look at that. Some quick sideline highlights here, guys. Draghi says, it is crucial that reforms are implemented swiftly. Says fiscal policy should support economic recovery. Swift, credible, effective structural reforms are critical. Reforms need to boost investment, jobs, productivity. Says cyclical recovery is no ground for complacency. All fluff, in my humble opinion, but nonetheless, we'll continue to track how that affects the euro here. So for sterling Kiwi, that was a major area of contention for support. Here's what the intraday chart looked like. Really beautiful triggers, guys. Real beautiful triggers. So here's the chart that we put together yesterday in the webinar. We were coming into the 20080. I was actually holding a short into this one. We got out a little early, like I told you, around 210. But whatever. You had that drift into, oversold into on the 5-minute trigger. And actually a trigger gave out before this last one. So there was a reason. But in any event, it's a key area of support. You had that slope line off the highs, a nice 50% retracement. You had a trigger that gave out a little bit late, but it was the break of the Asia Packer opening range. Initial topside invalidation level gave out. You're still liking the longs, looking for 202.80. Again, last target here just hit at 203.60. So this becomes a little bit more of a critical region. We highlighted this last night. Again, this represents your near-term bearish invalidation level. So just because we've been playing the longs doesn't mean the broader downside's out. This is what's going to take out the broader downside. If we do break through that, you're looking for this trend line here that takes you to 204.50 or so, just below the 205 handle here. So another play here. Losing some efficacy? Could be, Jay. If you're out at the bottom of, you're out now at the bottom of the open range, okay. This is how I would play this one. I wouldn't necessarily want to play this short just yet, but I'd like to see if we pull back into the, where is the European opening range low? Oh, it's way down here. Okay. So this is how we play it. We're going to go ahead and move. This was our bearish invalidation level. We're going to go ahead and lift this up to here. And as long as we stay above this pocket area of support, what time is this? This is here's yesterday's U.S. open range. So as long as you stay above this pocketed support, let's say around 207 or 202.70, 202.40, you'll see if you can find some long triggers here to get us back into that 203.60 region. On the daily, did we complete an outside day? No, not quite. But point being, long side here, you want to be cautious. Longs right now are at risk below this region. You just want to watch the pivot that we've seen. Obviously, we broke the median line. Your initial target really takes you a little bit lower. So on the rebound here, your initial area of support is going to be this. And on the daily chart, this was what would invalidate the short side. It would be a break above this region. Okay? So we'll look to see if we can get some short triggers here, maybe on a rebound, maybe play another long into this region before it turns over. But near term, below this region, you don't really want to be too anxious to get on the long side anymore. Again, another range scalp, guys. That is a long range scalp, meaning healthy ATR. Quarter, the daily ATR is really looking at about 55 pips per scalp here. Questions on Sterling Key. So Sterling Key, Sterling Oz, both playing out pretty well in overnight trade. Obviously, the better bang for your buck, as we expected yesterday, was the Sterling Key, but we'll continue to watch this. Here's what the Kiwi looks like. Now that we've gone over the pound, we've gone over some of the pound crosses that we've been looking at, specifically on the turnaround. Here's what the Kiwi looks like. Again, really frustrating for the swing side of things, but it just scratched it. So if you guys remember in the webinar yesterday, this thing was really pressing into the highs, just about taking out that upper median line parallel that you see there in blue. A basic trend line resistance off of the July highs. We highlighted this yesterday as well. And then we highlighted this region just between both of those median lines. We literally just came into it, scratched it. You had not much of a divergent signal into the highs, but you did finally get a trigger break there. Basically, at the break of yesterday's Asia-Pac opening range low, which gave you the trigger. So a little bit delayed on the entry, but nonetheless, you're now testing the weekly opening range low. Here's your Sunday open. And broadly speaking, sub 75.36, which is near-term resistance. You want to look lower. I mean, even the momentum signature here has collapsed to its lowest levels for the week. So I don't want to, jump on the train and just start shorting it just yet. Your key region on the 30-minute chart here that you can see of support that you'll be looking for is this slope gradient. So depending on where we are in time, this will be sort of the major key support you'd look for on a downside type of play for the Kiwi. But my point being here, guys, I haven't been involved in the Kiwi at all this week, but my point being is if this does break sub 74.50 finally, we almost got that fake break last week, but if it does finally collapse below, yeah, that's going to be a good time for the Sterling Key play, right? Especially if you get some sort of near-term recovery. Remember, the pound versus the U.S. dollar, even on the daily chart, I didn't show you this, is right at support. So on the intraday chart, we just talked about the reversal that we're seeing, or the support that we're coming into there in the pound. But even on the daily, you could see a scenario where, pound key gives us even a little bit more of a pullback than another upside play before it turns over. Questions on the pound crosses or any of the Kiwi crosses at this point? Some more headlines hitting the wires here. Draghi says half of euro area debt held outside the euro area. Says ECB objectives being gradually reached. ECB to buy negative yielding bonds up to deposit rate. And a quick look at what the euro is doing. Right back, unchanged on the session. Okay, unchanged since the beginning of the conference. So you'll see a lot of that during Draghi's talks. Remember, the downside support, a break below 1022 is would open the spigot. And I put this on the on SB yesterday, guys. This is the fallout zone, just so everyone knows. Below 1095, this thing could drop right into 108.90. I don't know. I haven't been playing the euro dollar per se. I think I just want to wait till NFPs let the smoke clear. But below this region, which we highlighted like last month, this thing could really fall apart. Not just on account of, a 618 or account on 100% extension, but just this major key region. A, it's a confluence of major key fib ratios, and secondly, you got that median line there, which has charged some really nice reversals in price. And if this is a legit break, you could see a pretty precipitous drop here. So even for a scalper like me, a little bit, a little bit too hairy here to necessarily scalp this on both directions. I'd rather just be playing the shorts on compelling triggers while below that 1155 region, which is, again, the basic opening range break for the week. So we'll see. Draghi says ECB to buy negative yield debt down to the deposit rate. Seems to be hitting the headlines a couple more times. Draghi says accommodative policy being passed on to the economy. Okay, it seems to be getting a lot of headlines with to buy negative yielding debt. That was sort of a contingent that some people were waiting on. Might be why the reaction is playing out here. Either way, let's guide price action, guys. I'm not going to trade headline by headline, so watch that key support. And like I said, it's going to be the near-term bullish invalidation level. Okay, moving right along, went over sterling, Oz, dollar, CAD, and let's do the Aussie dollar first real quick. So, Aussie dollar yesterday, a little bit of a disappointment on the retail trade balance side. We came in at negative 980 million versus the expected negative 925, but retail sales were right in line. You didn't get much of a play. It kind of tailed off a little bit. Here's where we were yesterday as we closed, or a couple hours into the Aussie session. And the near-term bearish invalidation level was highlighted there, just above 178.30. We brought that down from 78.50. Near-term support, 78.88 into 77.78. It's exactly what we're testing right now. So if we do get below this, I do want to point out that we are below 60 in momentum, and initially it does look good, but this is the near-term support. Okay, if we get out the underbelly of 77.78, you look for a drop into 77.45, and that would be right around this region here. The only thing that would shift the focus back to the upside for the Aussie would have to be a break above this region. And actually, it's just my trend lines aren't snapped. There you go. Okay. So that one has been another slow burner. You've been getting the 20 pips per scalp that you're trying to squeeze out here, but it's kind of like pulling teeth. You're likely going to see this thing go into a lull. If we don't break this support in U.S. trade, especially on the opening range or in the close of Europe here, guys, you probably see this thing go lateral into NFPs tomorrow. And obviously, all the dollar crosses are on the menu for non-farm payrolls. So now testing support in Aussie. Again, break below 77.80, 77.90, 77.89 there. and you look for that drop into the 77.45 zone. Let's see what this looks like in the 5-minute real quick. Okay, so it actually sets up for a nice opening range play possibly here in the United States, guys. Here's the 830 U.S. opening range low. Here's the opening range high. You'll have to see how this looks as we head into the 9:30 slot here as we close out the webinar, but it's beautiful when the session opening range is taking shape just above support. The break of that support adds validity to the directional bias immediately. So we'll watch this into the 9:30 slot. If we do see a break below 77.78, like I said, you're basically looking for that drop into 77.45. So possible play here as we head into U.S. trade. Okay. Guys, any questions? I do want to open up the floor. Any questions that you guys want to look at, specific pairs, questions on non-farm payrolls tomorrow, questions on the ECB? You know, this is going to be a whole lot of fluff coming out, guys. This is going to go on for another 45 minutes. Draghi says no one can really say the ECB is the central bank of Greece. Or Draghi says one can really say ECB is central bank of Greece. Draghi says ECB is the first to wish to restart the financing of the Greek economy. It says the ECB has lent Greece over 100 billion euros. And some posturing and political gesturing, yada, yada, yada. So we'll see once he finishes these remarks. Remember, near-term support still 110.22. Dollar index taking another peek above 11,880. And just a quick look, guys, the relative performance against the greenback so far in the session looks like this. So the dollar is stronger against all its major counterparts. Obviously, the Kiwi is the biggest loser on the session, down 1.25%. But you also have the British pound, Aussie, CAD, Euro, all about a third off of a percentage point on the session. So we'll have to see if that dollar strength persists into non-farm payrolls tomorrow. The print, like I said, we are expecting somewhere in the range of 235,000. Unemployment is expected to downtick from 5.7 to 5.6. And we'll have to see what kind of implications the participation rate has, because that's at 62.9. That's coming off levels we haven't seen since the 70s, guys. So what we've continued to see in non-farm payrolls is as the participation rate upticks, it starts to put some artificial downward pressure. So we'll have to see if the unemployment rate holds at 5.7 or drops to 5.6. The dollar CAD. Here's what dollar CAD looks like. And euro or dollar pushing to a fresh high here. Euro looks like it's going to approach the lows. British pound. Also, looks like we're going to get a tag of that 52 region we were looking for last night. Clean levels. Here's what dollar CAD looks like. So that was another one, surprising play. You know, it's funny because we were talking about dollar CAD here in the webinar yesterday, right before the BOC. And here's what that looks like. Okay. So we were talking about this setup yesterday, and this being the near-term bearish invalidation level. If you remember on the 3rd, the bearish invalidation level was set. Bearish invalidation level set was 25.25. That was on the 3rd. So on that rally yesterday into that region, you were definitely risking, you know, a complete break and just a topside play for the dollar CAD. Remember, the broader play for the dollar CAD is still this consolidation. So if we had broken that topside, you're essentially looking at like 26.46 again. Long story short, The trigger never gave out. 60 actually did hold. Remember, we were looking at this on the 5-minute, and then the reversal took you right below the European opening range low. And then it came right into that key support target that we highlighted. So this is still, as we noted last night, this is still the near-term bullish invalidation level, meaning your short appetite gets trimmed up here. We actually came for an exact test of the lows, and that held. Momentum. Looks like we had a trigger break here last night too. Nice play, and now we are testing the near-term bearish invalidation level. Okay, so resistance right up at 24.75, which we dropped the bearish invalidation level from 25.25 last night to 24.75. That's the level that we're testing right now. So as long as you stay below this, you know, the broader slope is in play that we're playing with here. On a topside break, you're not bearish anymore. Okay, you're looking for a rally back into 25.25. You're looking for a rally into the opening range high for the week, you know, at 25.65. Are you guys following? Are you able to follow the mentality? It's on these plays, on ECB, on interest rate decisions, announcements. You got to just take it step by step, climbing the ladder. Draghi says ECB ready to resume Greek waiver if conditions are met. Draghi says the ECB raised the ELA for Greece by 500 million today. ECB would buy Greek debt from July/August if waiver is backed. Interesting. Okay, so a little bit more of a leniency here and a willingness to hold things together, as it were. Draghi says the ECB has overcome issuer limit on Greek debt. ECB ready to resume Greek waiver of conditions were met. Okay, I'll keep bringing you highlights on that. On the euro, still at the lows. Still at the lows. Remember, then near-term support, guys. Okay, so any questions on the dollar CAD from here? That actually might have just been a really good entry in the short we missed here for dollar CAD. Let me see if the 5-minute has something compelling. Okay, so here's a 5-minute trigger from the low in price. Yeah, I can't short while this is an overbought condition. As long as this condition holds, guys, even on the 5-minute chart, the propensity for the market to keep moving higher is there. So very rarely you're going to want to actually take a short while momentum is in the overbought condition. But this would be a trigger that would be compelling, at least to play a near-term pullback here if this near-term bearish invalidation level does hold. It's hard to justify taking a long, even if you do get the break, just because of the stop. You know, effectively your stop would need to be at the Asia or at the European opening range low, or even the 830 opening range low, which takes you all the way down here at 2430. So I can't really say I'm excited about getting on any type of long exposure here if we break out. Your risk to reward just isn't there. The risk to reward just isn't there. Aussie also sitting in that invalidation zone here. See if we get that break. All right, so those are the setups that were highlighted on the intraday page last night. In the current setup, you guys have a full plethora of plays here to get into tomorrow's NFPs. Dollar yen, we didn't go over that. Another disappointing play that did break to the upside here. Listen, the invalidation level actually just gave out in Asia, or excuse me, in Europe earlier today, and it was this region here. We highlighted it last night. So this was the near-term bearish invalidation level. The break above 119.90/120 invalidated the short side near term. This is now near-term support, okay, on the pullback, with resistance still higher at at 120.47, 120.50 here. So you just didn't get the pullback. You just didn't get the pullback. We were looking at this trigger yesterday during the webinar. The thing held all through Asia, all through Europe. The trigger just never came. So it's still an active trigger. Okay, and if we get back below this support at 119.19, 119.90, 120, if we get back below this and the trigger gives out, it could be a nice play right into key support, 1950. But as it stands right now, this is the near-term bullish invalidation and support. So as long as you stay below this, above this rather, you want to curb the appetite for the short side. Okay. Any questions on dollar yen? And again, the dollar yen, before we call the breakout of this triangle or the resolution of this, guys, like I said, we're still going to be using the same key region, 120.47, which is the close highs for February, and 120.20 is going to be that longer dated 618. This is off the 2007 highs, I want to say. Oh, this is way back. It's like the 2000 high, 1998 high. Actually, I just know this also. You also want to keep in mind the outside reversal day that you made here in January, and that comes in at close 120.66. 120.66. Got to make sure that level's highlighted. 120.66. Okay. So that is dollar yen. Just a quick update on some of the commodities we've been following as well. Gold. Is anyone bored of reading about gold yet? Because all I wrote yesterday to you was hello range, because we're still sitting right there. Again, 1195. It's funny because every time it breaks 1200, guys, you'll look on Twitter and there'll be like 50 tweets going out. Oh, gold breaking 1200. Doesn't matter. It's a psychological barrier. The real important support is 1195, 1196, 1198, and that's where we've continued to find some basing. So, not per se a scalp, but necessarily it's going to be a very clean March opening range, because the March opening range in and of itself is between two major key barriers. 1118 to 1123 on the upside, 1218, 1223 to the upside, 1198, 1196 to the downside. This is going to be your opening range break. If you see the top side break, you play the recovery 1233, 1248. A downside break is the more risky one, which pretty much drops into like 1171, 1150. But a really, really nice key range that we've been in for over almost 2 weeks now. So we'll watch for that break. Again, a trade tomorrow comes very, very much into focus, especially with the dollar index doing this. Okay, so if the dollar index extends into this median line, guys, and that holds, and gold is unable to break the lows, then you get a dollar adverse reaction tomorrow. That's a perfect recipe for a really nice launch right back into 1220. It's really going to be determined on whether the NFP actually charges a dollar action or not. Remember, the focus from the Fed standpoint has largely been on the inflation picture right now, specifically with what's been going on that front. Inflation numbers were a tad softer than expected. And unless, again, remember, with these types of release, a little bit easier to trade than necessarily the ECB or the NFP or the Fed, because it's just the reaction to the number. So remember, we're trading the deviation off of the expectation. Right now, we're expecting 235 in non-farm payrolls, 5.6 on unemployment. Participation rate, we want to see that at 63% if possible. But those are the three numbers that you'll want to really kind of tag tomorrow morning. And again, we'll keep you updated on the squawk as soon as that hits as well. So an interesting setup possibly to open up the month for gold. Finally, if we're able to resolve this major range that we're in. Same thing on the dollar index with us closing today above 11,880, clearing the way for a continued upside slope here in the greenback. Okay, remember we'll be hunting for stops for short triggers here near term on sterling Kiwi as well, below 203.60. And the same thing on the sterling Aus. We'll want to see how that is reacting here. So on this one, Sandy, it looks like it's still holding, or who was in this one, sterling Aus? Yeah, Sandy, it looks like it's still holding that opening range high. So we'll continue to watch that 195.40 region as near-term support here. Okay, guys, so if there are no other questions, we'll wrap it up early here today. We'll be on the squawk tomorrow, giving you highlights as we go through the NFP print. Again, watch the dollar crosses really be the play. The dollar yen is going to be something I'm going to be very interested in, especially heading into U.S. data, guys. Usually a very big reactor and a strong performance here. So definitely take a look at the dollar yen. Again, below 120.20, 119.90, you risk the downside again. I know it's not what we want to hear because we just got cleared out of the rest of the trade on the short there, but that's still the scenario we're looking at. You have a very compelling trigger, 3-touch point trigger here, so we'll see how that pans out into U.S. trade. As far as the commodities, real quick, just a look at the copper trade, something that we talked about yesterday as well. Very similar to what we're seeing in gold. By the way, sterling CAD with that reversal that we're making. This is a weekly chart that was posted on Daily FX back in January. Really huge region of resistance that we just tagged. Okay, so again, the sterling turnaround story and the CAD strength story, could be something that materializes very nicely on this cross near term. You're basically looking at support at 186.70. Again, a weekly chart, guys, for your consideration, but it's sort of good to take a look back at some of these crosses, specifically when the major pairs are making decisive moves like they are now. So that's one thing, but to stay on topic, the copper trade real quick. The same range that has been focused for gold is basically mirrored here, except here you also have some trendline support in the lower median line parallel. So on this one, again, 260 into 262, let's call it, is going to be your major key support. The only breach that we would be looking for to continue maintaining the upside bias is 273. So no change on that either from yesterday. Okay, guys, best of luck. I'm going to wrap it up here. Best of luck trading the rest of the day here. I don't really think we're going to get anything more material out of Draghi as it stands right now. The euro support range that we talked about is really what we'll be looking for as we enter the U.S. Looks like we're probing through it now. I don't have any scalp targets beyond here, guys. I really don't. If we do break here on the daily chart, the really only other level that I'm looking down at is like at 109. So I don't really know if you want to necessarily scalp this or intraday trade this. You might have a better bet trying to play some of the crosses. Here's a euro-yen chart that we threw together earlier last week, if you guys remember. We just broke the invalidation level here. Looks like we actually just reversed and held below it. So on that type of play, you'd be looking for a drop even deeper into like 131.75. If you bring this to 764. $67, 131.70, 131.67. So some plays in view. Best of luck. I'll see you tomorrow morning, or good luck tomorrow morning rather, on NFPs, and we'll keep you updated on the squawk, guys. Have a great